Let's move on to a bearish call on Tesla. Now, Morgan Stanley downgrading the stock to underweight, citing sustainability concerns. Now, this comes as an S3 Partners data reveals that short interest in Tesla ballooned to $14.5 billion yesterday, taking the #1 spot from Apple. We have Emily McCormick here with us. And Emily, we can see the shares down just over 1%. When you take a look at what Morgan Stanley is saying about Tesla, they're saying that they're concerned about the recent run-up and also the risk in China. Now, China has been cited by a lot of bulls, which is very interesting here.
Right, and this call from Morgan Stanley really dealing a blow to Tesla's stock after that run-up we've seen since really those third quarter earnings results back in October. That stock is up more than 100% since then. But to your point on China, Morgan Stanley isn't necessarily bearish on the prospects in that region, especially as Tesla has ramped up production to 1,000 cars per week, really gotten this off the ground, turning it from a muddy plot of land into a fully functioning factory in under a year. But what they're saying is that the risks involved with this geography might not be fully appreciated at this point. So what Adam Jonas had to say is, quote, "We continue to harbor concerns whether in auto business commercializing advanced dual-purpose technology in economically sensitive industries could be a long-term winner in the Chinese market," end quote. So this is a concern that he has not just for Tesla, but for the other OEMs that are also in the region, like NIO, for example. And of course, just looking at Chinese auto sales, those were down more than 8% in 2019. So definitely a difficult operating environment for any company.
And Emily, not only overseas, but also here in the U.S., we got some new stats. Tesla saw vehicle registrations in California cut nearly in half during the fourth quarter of 2019. When you take a look at those numbers, coupled with the risk that Adam Jonas is highlighting over in China, it could be a rather tough year maybe for Tesla to live up to some of the bullish expectations that are out there.
Right, and that also has to do with the valuation that we have on the stock right now. That's another point that Jonas had pointed out. When Tesla was trading around $520 per share, it's now around $512 now. He said that the stock was very close to pricing in his bull case assumptions for growth and profitability. So that stock was trading at more than 31 times Morgan Stanley's 2023 GAAP EPS estimates. So really highly valued if we think about it in terms of an auto stock, which is how Jonas is really orienting this. So there's just a lot of risk to the downside for this company. And then again, as you mentioned, with vehicle registrations in that main market of California, those about halving during the fourth quarter, coming in at 13,584 for the quarter ending December 2019. This is also coinciding with the cut that we saw to those EV tax subsidies throughout the course of 2019. Since Tesla has hit that threshold of 200,000 cars sold, it has seen continuous reductions on that subsidy.
All right, Emily McCormick, thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.